Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, June 13th, which is Friday the 13th, 2008. Well, as we get into today's video, folks, we're going to look across the board at various hot sectors. We're going to look at the indexes. We're going to look at oil and gold, and just kind of get an overall view of where we've come from over the last couple days. Now, InTheMoneyStocks.com once again nailed this directly on the head with their call 2 days ago, switching from a neutral bias to a bounce bias in the markets. As the markets bounced the last 2 days, solid bounce today, guys, no doubt about it. A big-time bounce with the Dow up today 166 points, the NASDAQ up 50 points, and the S&P was up 20 points. Solid bounce across the board. InTheMoneyStocks.com 2 days ago had gone to a bounce bias after being in a neutral stance, and we've seen what that has done to the markets. We've seen a beautiful bounce on the markets. Well, we're going to switch now, guys, and this is the key. So we're in a bounce bias. We're moving back to a neutral bias now with a whippy market going into next week, which is options expiration. So I want to repeat that. We're now moving back to a neutral bias after this bounce, with a whippy market expected, a chop shop in other words, meaning a lot of ups and downs and whipsaws with a slight downside bias, which is what we were prior to calling for the bounce in the markets the last 2 days. So again, remember, bias has changed now to a neutral setting for options expiration week, and remember, options expiration week is notoriously whippy as they try to flush each side out, the longs and the shorts, trying to get the market to pay as few of those puts and calls off as possible. All right? So now, just before we get into the analysis side of things, folks, I just want to touch on the webinar that's going to be on tomorrow. And this is how we do it. The call the last 2 days going to the bounce bias, this was what we saw in the chart. We looked at the price pattern time and various other indicators that we'll go over in the videos, and this is how we know it's going to happen. And it's so important for everyone to understand this. We're here to teach. We're here to help. That's why we put these videos out. And you guys can see here from the list out, this is the various topics that are going to be covered. We're going to go over time patterns, when to apply them, essential time period analysis, support and resistance points, volume analysis, the keys unlocked, contrarian thinking philosophies, proprietary trading discoveries, and live chart analysis. And we're going to put it all together. And you guys can pause this video and look it over each one of these things here, what we're going to go over in that video. And there's even more stuff we're going to go over in the webinar tomorrow. And again, it's tomorrow, which is Saturday, June 14th, 2008, 1 p.m. to 5 p.m., a 4-hour webinar. And again, what happens, you sign up, we send you the link prior to the meeting. You link in, you see our whole screen and all our charts and everything we're teaching off of. You dial a 1-800 number. You come in for free, no charge on those. Again, depending on what country you're coming from, you have to double check that the 1-800 numbers are free for you too. Anyone in the United States, that's free for. In any case, you talk live to the instructor. It's an interactive thing. You have questions, you ask questions. You want to look at this chart, that chart, you ask it, and we do it. So come sign up. Go to InTheMoneyStocks.com and click on webinar, and the sign up button is right there. All right, folks. Let's get into some chart action as we had the nice rally today that we had called for. And again, moving to a neutral bias with a slight downside, hitch to it over the next week or so as we get into this options expiration week. So let's look at the intraday chart. What happened today? What went on today? Well, we had the CPI this morning, which is an indicator of inflation. And this is why I really want to go over this today, because it fascinated me today, because every average guy out there, including some of those in my family that I talked to, had the wrong impression of this. And I assume if one person does, everyone does that's on that certain level, which is the average person. And so it's nothing wrong, it's just the average person's perception. And this is what happened. All right, so you think about the CPI number, right? It gives us an index for inflation, how much inflation is out there. And in theory, or what most people would think, and this is why we follow the charts, and we had called for the market to be oversold, is because, in theory, a high CPI number, meaning it shows a lot of inflation, is a negative thing for the economy, right? Oh, inflation's bad, this can't be good, So why was that wrong? Why did the markets rally today on that? Well, this is why. Because in the market's warped sense of thinking, all right, again, in the market's warped sense of thinking, if inflation came in high, which it did in the CPI, it means that the Federal Reserve is more likely to raise interest rates, which in tune, the thinking that the Federal Reserve will raise interest rates strengthen the dollar, which in turn means that oil and commodity prices pressure will be put on them to the downside, since they're all traded in U.S. dollars. Thus, the idea being behind it, a high inflation number means oil and commodity prices will come down, and that's more bullish for the economy overall right now. So that's again why the charts are key, and we've been talking about this oversold market here needing a bounce, and we didn't care what the CPI number come because the charts told us what was going to happen. So again, that's why another reason why you should take this webinar, guys. It's unlocking gold. It's a gold mine, no doubt about it. In any case, what you can see here is that you had the 830 number come out. We sold a little bit off on that. Then you really started to rally once the market came into play, and then we sold off a little bit, rallied back, and kind of drifted down. And this was interesting because everyone expected what happened yesterday to happen today. Now remember, we rallied big early yesterday. We sold off yesterday afternoon, and we kind of, you pushed up a little bit into the close, but overall from the highs, we were off the highs big time. Now, everyone thought that's what was happening here. But this is one key to remember, guys. When that happens, a lot of people take it as a bearish signal. Yesterday was a bearish signal, a lot of people would say. We take it, we know how the charts work, we know how to read this. You have to understand that go the opposite way there. When it sells off, that doesn't necessarily mean, oftentimes that leads to a following day rally. As long as you end positive, as long as you're not ending negative on the day, and you close positive there, even if you're well off the highs, it's not a negative indicator, meaning you're going to continue to sell there. And in tune with that, you saw a late day push back to the highs of the day. Nice double top there, and that could be sold, and you get a little dump into the close. Nothing major, but nonetheless, phenomenal trading day today. There's some good day trades out there, very good day trades out there today, as this market was extremely volatile, and plenty of action out there in such a rally like this, with the NASDAQ up 50 points on the day. Alright, so now let's get into some daily action. Let's talk about oil first. We talked about oil. Oil was down about $2-ish today, give or take, $1.75, $2. Right now I'm seeing it down about $2.34 on the day to 134.86, and we continue to hover around this double top area. Now, a lot of people are saying to themselves, is this consolidation before we break out? I'm not so sure about that. We'll know next week. My guess is we will know next week. Options expiration towards the end of that week, we'll know. I still feel personally that the oil will sell off hard very soon. I think there's too many bulls on board expecting it to break higher, and when there's too many, it goes the opposite way. But I could be very well wrong. I mean, this is a crapshoot, really. It's just my gut instinct telling me from trading for years that it's a lot of people thinking that this is consolidation before a breakout. I happen to go the opposite way on that, and go with my philosophies and my contrarian thinking. On the GLD, you had the GLD basically flat today, and it continues to hover right above the 200 moving average here, which is good support. You may see a dip on that down a little bit to that point, and we'll continue to watch for that to see if that dips down to that 200. Alright, now let's get into some action on the daily charts of the SPY. What did we see here? Well, we saw the hard sell-off, alright, ever since that whipsaw a couple days last week, and then we saw the rally here the last couple days. Now, you could trade a little higher, and this is the key, guys. Remember, options expiration, it doesn't necessarily mean you're going to rally or sell off. What it means is you could have a big up day, and you could have a big down day, and most likely there's going to be both in the mix there, alright? So that's why options expiration is so wacky, and believe it or not, it's one of our most hated weeks to trade, because it's just going to be whippy, and the poor souls out there that don't have guidance like we have in our chat room can often get whipsawed out. We tell all our traders in the chat room, be on alert, take smaller positions this week, understand that options expiration is a whippy week. If you're holding things overnight, be careful, have tight stops, understand your stops, and understand that oftentimes they'll whipsaw you out of that position. And generally, day trading is what I personally do more so during options expiration, unless I find a beautiful chart pattern that I just love. So that's the key, guys. Just understanding options expiration. Understand what the big players are going to do, and they're going to push the market. Generally, the market will end the opposite way of the majority. So if you have a lot of people out there that think the market's going up, well, chances are by the end of the week it's down. And if you have a lot of people thinking that the market's going to go down, it usually ends up. And that's the beauty of it. So again, nice little bounce here on the day. We had talked about some good support areas coming right in here. And look at that. All right, look at the gap fill. See this little gap right here? And I believe that was April 15th to April 16th. You had a gap. Now let's draw from the closing of the gap. What areas do we come right into? Look at that, guys. I mean, does it get any more beautiful on charts? And this is why charts are king again. because we had talked about this gap fill area in videos 3 weeks ago. And you guys can, I mean, if you can go find the video, I wish I could reference it right now, but if you can go find the video, we talked about this area. This is where the market's going for the near term here. And you have this gap area, gap fill. Gap fills are key areas for bounces. And look, we touched that, and then we bounced. Now, it doesn't mean we're not going lower. Ultimately, I think we are going to go a little lower. There needs to be one more flush out. Goldman Sachs is reporting earnings next week. That's going to be very interesting. Not that I believe them necessarily, but it's going to be very interesting to see what they report. You got the PPI coming out early on Tuesday next week as well with Goldman's earnings. Plus, you also have that options expiration week. So it's going to be a wacky week, no doubt about it. But either way, look for that. It's going to be very interesting. Look for the support, and once we break this support, maybe you see the next area right around the lows there, and then next week we'll go into more support areas on the downside. But it doesn't mean, remember, we're calling for a choppy week next week with a slight downside bias with options expiration, and then we'll get back into more direct stuff following that week. Have a wonderful day, guys. Come do the webinar, join the chat room, join the Swing Trade Alerts. We'll talk to you next week.